Hello everyone, this is Xratios Investor. Please note that this video is for educational purpose, and please still do your own research. If you liked this video, please give me a thumbs up and hit the subscribe button. Apple, under the ticker symbol AAPL. Apple stock down of 6.6% to $207.48 per share. Is it time to panic? I am still going to buy Apple stock, and I will tell you exactly why I will still buy Apple stock shortly. After Apple's report came out, I decided to sell my shares to reposition, and find a new entry point to add my stake in Apple. Apple stock fell to $205.43, a drop of 7.68%, before stabilizing at the end to $207.48. For starters, it is easy to buy a blue-chip status stock, especially when a company stock is on a downtrend. In other words, buying while it's on a dip. That is a good start and good thinking, but I personally think that we should look at the Apple stock objectively in terms of how Apple's future is gonna be from this point on. Because buying low, but not understanding the future of the company can cause more harm than actually help you in earning profit even if the stock is Apple. I am a long-term investor that looks beyond that, which is why I will be focusing on the market outlook. Hence, here's a few breakdown of what investors should know before we talk about Apple's future outlook. In August at this time of the year, Apple became the first public company to hit a $1 trillion market cap, which means that Apple was at the top of its peak. As we all know, things didn't go as planned, and we saw Apple's market cap fall back below the $1 trillion on the November 2nd before stabilizing back to the $1 trillion mark. Would I say it's due to an absolutely horrible fourth quarter report? No. In fact, Apple beats the fourth quarter earnings thanks to price hikes on their products. On average, analysts were expecting revenue of $61.6 billion and earnings per share of $2.78. Apple reported revenue of $62.9 billion and earning per share of $2.91, beating the analysts' revenue expectation by 2.1%, and earning per share by 4.3%, and up from $52.58 billion in the year earlier quarter. But what stopped the stock from rising is the outlook of 2019 next quarter earning report. Apple offered a disappointing revenue outlook of between $89 billion to $93 billion in fiscal 2019 that was weaker than the analysts' expectation. What's worse is that on Thursday, November 1st, Apple will no longer provide their unit sales for iPhone, Macs, and iPads, hinting lower than expected demand for the new expensive products. Even the iconic iPhone could not deny reality with the worrying smartphone sales saturation. Which makes me believe that Apple is acknowledging that they could only sell so many devices before hitting total saturation. In other words, Apple's devices will have excess amount of inventory, leading growth to become flat. CEO Tim Cook and Apple knew it would get harder and harder to sell more iPhones, so they raised prices and expanded into new growth areas. Apple also worried that the tariff war might affect the international sales, which is the reason why Apple lowered its future outlook of $89 billion in fiscal 2019, as the international sales accounts for 62% of the quarter's revenue. Though the tariff war has been progressing well lately, which could lead to a huge percent-beating surprise in revenue and earnings per share in the next fiscal report. With that in mind, here's the main reason why I still like Apple's stock, and why I think Apple might have the last laugh. I think the reason to that is because many people failed to see that Apple has begun to transition from the iPhone business to service business. While we will no longer see Apple's unit sale, Apple planned to make up the iPhone business with its service business, as Apple expects its service business to become a major revenue. These services include from iCloud, Apple Music, iTunes, and the App Store to Apple Pay and Apple Care. Fourth quarter services revenues jumped 17% from $8.501 billion to reach $9.981 billion, making it the second most profitable part of Apple's business, trailing behind the iPhone, which pulled in $37.185 billion, blowing past analysts' estimate. What's more is that Apple is expected to enter the streaming service sector, that could someday become a powerhouse in the industry. Apple CEO Tim Cook pointed out that Apple's services business could qualify as a Fortune 100 company on its own. To further affirm my reasoning, recall the Amazon story? Amazon's price soared in 2015 after the company began revealing not just its revenue from cloud services, but its stronger than expected profits. Which is why I could envision Apple following the similar trend when Apple discloses the profits of its service business. Only time can tell if that holds true. But in short term, we will need to keep an eye on the next earning report, which includes the holiday shopping season factor, and to see if Apple's new pricing strategies on their new devices is working. That's all I have for this video. Do note that speculation caused people to pay no attention stock valuation consideration, so please exercise the stock with caution despite my research and speculation. Subscribe here for more stock videos, and leave a thumbs up if you like this video. Comment down below and let me know what stock you would next like me to talk about. Till next time.